Hey guys, how you going? Oh, just had a little nap. Wrecked. A little bit tired. But we have some movement in the market still. Now, we were talking yesterday about the potential for a pullback, mainly because things were getting overbought. Things are getting even more overbought today. So US dollar, we're talking about mainly here. It looks to me like 110 is going to be tested, but be very careful. Be very careful in your longs. If you're long, just get out. I mean, it's there's a few things happening. It's not just the fact that we're running up so quickly, and this is maybe the 6th, 7th day in a row now. It's also the fact that what we're looking at here is the US yields. If they continue to rally at the speed at which they're rallying, and the sell-off that you're getting in the emerging markets because of it, there's going to be some unintended consequences, and that's going to be mainly selling in stocks coming through, and that's going to be this self-fulfilling feedback loop that will turn the market into risk off and cap this dollar yen rally. So the dollar yen's already overbought, and you're running into crazy overbought territories. I would be at the moment just sitting on the sidelines and waiting to get a substantial pullback to buy the dip. Exactly what the catalyst would be hard to say, but what we're definitely going to add to this today is the US 10 years, because the US 10 years, you'll be able to see exactly what I'm talking about there once I add that chart onto the screens. Let's see if I can get that on now. Yeah, this is getting dangerously sort of crazy. Someone asked, Renko, I think you asked about the DAX. I'm selling the DAX at the moment. There's a lot of uncertainty, and also just it's stalling. It's failed now at 10.8 3 or 4 times. Where's the next leg come from? You know what I mean? Like the market's on this sort of irrational tear on Trump hope, and it's likely we're going to see a little bit of reality coming into this market very shortly. I'm not negative, but I'm just here for a pullback towards that 10.6 level, which will be the target here. It's only 100 points or so, but if it breaks 10.6, I mean, wow, I might take half on the way down. And that's, I mean, one of the trades. I mean, I'm actually looking to sell dollar yen soon as well. Now that's a little dangerous, obviously, selling something so strong, but yeah, I mean, I get attracted to extreme positioning, and that's the sort of thing that my mind searches for rather than to buy. Sometimes I like a little tactical sell here and there, here and there again. Counter chain trades though, I try to keep to a minimum. But let's bring up the US 10 years and just watch the correlations. You'll be able to see that. And I'm gonna have to refresh them. I haven't added any trades yet today on the streaming account, but I will be just selling a bit of dollar yen here. Tight stop. I got to refresh to add the updated little updated watch list. All right. Is FX Viper still with FX signals? Can't see it mentioned on the side. I think he left last week, mate. He was under a lot of pressure. He hadn't been trading well for a while. Sort of take his ball and went home. I think he's just, I mean, at the end of the day, it's about money, right? He wasn't making money, so he's basically tried to cut Nick out, from what I've read. Do the whole man thing by himself. I think that's a mistake. He has a really, close relationship here with the site, so you don't quit after trading bad for a year and then expect the clients just to jump ship with you. That's just crazy stuff. But I wish, I hope he starts trading better. I mean, he was trading really well a couple of years ago. I understand the why he had so many traders trading with him. It's just he lacked a little bit of the ability to adapt to the market. Alrighty, we are now going to add you in here somewhere. I mean, look, this is the 10-year in general. Okay, so let's just start with that. You think the stream's up? Is it up at the moment, boys? take off the camera, that sometimes speeds it up. Alright, so keep an eye on this. This is what you really want to be watching. It's actually, this is the bond market that's moving so much. Now, the selling that we're getting in here is creating the US dollar strength. Now, this what they take away from this price action, what they take away from this number is the 10-year yield. All right, and as bonds are falling, the yield's increasing. Yeah, now there's been sharp selling going on here in the bond market, but if we start to see stabilization or even some sort of counter trend brief relief rally back to say 127, that puts dollar yen at 108. That's where the the sort of leveling is. So while we haven't seen that yet, I'm keeping an eye on this, and we have seen just the past hour or so, just a little brief burst. We haven't seen that reflected too much. 15-minute euros, but the relationship with the the euro is just uncanny, right? And so this is really what's driving the market. Okay, so you can see it. It is the driving factor there. So any sort of movement here, this is the prime mover. It's not like this is moving, then this is moving. This is moving, then this is moving. Okay, so keep an eye on it. Yeah, pound yen's really rocketing. We talked a lot about it in the past. When does the pound yen do well? Pound yen does well when, save this. Pound yen does well when dollar yen's doing well. The main reason is that it's usually on risk on sort of trading, and it actually allows the pound to trade, to rally as well. So when there's no negativity and then you had that dollar yen rally, the best thing to play if you don't want to play straight dollar yen is going to nearly always be pound yen, and it's basically just a sped up version of the dollar yen. So this is where you have to be careful with the pound yen, because if dollar yen falls, pound yen falls. And so the pound yen trade is definitely taking their cue from what's going on in the dollar yen, and it's it's entering overbought territory as well. If we have a little quick look at it, and there's just no reason to be involved in a pair when it gets like this, especially if there's no substantial change in, say, the underlying Brexit concerns, right? Or if it's a bit of bond market shifts that's doing a lot of the work for, say, Kuroda and the Japanese yen. Yeah, I mean, all we have to come out here, you got big risk coming with the Fed. You see Laka come out this morning. He's basically said that they may raise in December and then be neutral. Jesus, okay. How's the market going to respond to that? Stocks would like that, but would the US dollar like that? No, not really. There's room obviously to keep going to 140, 144. This is the sort of levels that we're targeting on the last rally, but it's just whether we have that pullback in between then. Pullback yesterday was on the back of some pound stuff going on, but that was tiny. That's nothing. This there hasn't been a substantial pullback yet. So yeah, I'd be careful chasing. I wouldn't sell pound yen though. That's just sort of nutso stuff, right? You're asking for trouble. Alright, so I've added now, and I don't usually add pairs to my watch list. It's been a really long time since I've done that, but I'm adding now the US 10-year, and I'll be taking cues from it. Also, keep an eye on the US dollar index. It's above 100, sitting pretty. If it dips back below 100, obviously that will gain attention in the market, lead to fears that the rally is over short term. So the more overbought it gets, say the market even rallies for, I don't know, an 8th day today, you would still see continued signals there that it would be even more dangerous, because dollar yen would be like at 110 then, right? And the conditions would be even more stretched for profit taking. But yeah, I mean, it definitely can. We're still, I think I was telling you guys yesterday, 13 is the record I've seen, but that was negative 13 days. That was for stock markets and just generally one-sided moves. In terms of data last night, I told you to be careful of the retail sales. No need. Retail sales was super strong. That helped the market continue on. But you saw some profit taking come through after the open as well. So by no means is it a done deal. I know we got ended higher, but it's by no means a done deal that that the US rally is intact. So that that everything would falter together. It would be 1 or 2 days of pullback. It might have a catalyst. It doesn't need a catalyst. Just profit taking. But it is it is the thing to be watching for at the moment, I believe. I was ready for it yesterday. I'm definitely ready for it today. So like I said, I've sold a little bit of dollar yen, sold a bit of DAX, and if I'm wrong, I'll just take the stops there above the fresh highs, and then be looking to see how the market develops, see if I can get that sort of tapping out level. There is a little bit more data tonight. Now, the data we have out in 7 minutes is, back in the day, very important for the pound. It's the wage pressure data. So this is the average earnings. The climate count is not that important. Unemployment rate is not that important. It's really what's important is that they want to see wage inflation come through. So the average earnings is forecast at 2.3. If it starts to tick higher, then that would be another bullish little sign for the UK economy. But since the market, it's not trading fundamentally at the moment, it's trading politically, I wouldn't expect too much of a movement in the pound. But it wouldn't hurt, right? It won't hurt if it comes in strong. And then later we've got US PPI. Now that's inflation data, but not exactly watched lately, not in the last couple of years. More important would be the crude oil inventories. There is some impact coming through in the oil market, up 6%. On continued speculation that a deal is in the pipeline for OPEC in the December meeting. Right, that's that's still the burden of proof, I believe, is on the OPEC members. I'm very skeptical of trading oil on rumors like this. It's not good for your health. Tony, do I think iron ore drop is the case for the selling in the Aussie? Mostly it's the US dollar strength. It's just, basically the reason that Aussie hasn't fallen further is that some of those base commodities have been doing really well, copper and iron ore. Now, iron ore and copper both had huge falls in China. Now, that's half to do with there being a sort of half little bubble, other half to do with those new regulations that came through, where they're trying to limit. They're trying to limit the speculation in the commodities markets over there, because they've got this huge speculation game. I think I was reading in all places zero hedge. Let me see if I can find it. Zero hedge is not your most reliable piece of information, yeah, but if they're presenting things in chart form, it's hard for it to lie. So what they're looking at here is what happened back in April or May when they had that crash in the commodities. All right, now that they're showing the equivalent movement in the last couple of days trading. So iron ore is down 14% in the last 2 days. Significant move, right? Iron ore futures starting to fall. But more importantly, open interest is starting to correct. And you're getting huge, collapse in the open interest in copper as well, which they speculate is going to lead to this crash coming in futures, crash coming in copper, crash coming in rebar, coke and coal. Coke and coal's been half the reason Aussie's been so strong as well, even in face of many problems in the past. We do a lot of coal to China as well, so I do keep an eye on this, and it is definitely dangerous for the Aussie right now. And the Aussie's sitting right there at the 200-day moving average. I mean, what is more important right now is if there's correction in the US dollar, that would help the Aussie rally. But without that, if we get a push through here, you could see a little mini collapse in the Aussie. It's been holding up for literally months, and something has to give, right? I mean, the range can't continue forever. So, I'd be very concerned here that we are breaking to the downside, but we're testing the 200-day moving average at the same time. So there's a few things in play here helping it support it. While it may not break today or tomorrow, it's probably going to break soon, right? It's just too much pressure, and the path of least resistance will be down, especially if there's that correction in commodity prices. So yeah, I'm bearish on the Aussie short term. I think it's going to be broken underneath the US dollar strength. I'm not getting too carried away with it though. I'm not in the pair, right? But I can understand it if it wants to have a mini little collapse down to 73 in the coming weeks. See, I mean, this is the thing with the Aussie. The volatility's got so low that a move to 73 would actually be quite large for it. Sorry, pound news. Let's have a little looky at the pound. I don't have my Reuters machine at home, so I don't get the flash news. So if you're asking yourself what's more, the fastest way to know the result, I mean, look, immediately the direction, the movement in the market tells you if it's good or strong, strong or weak. But if apart from that, it must be neutral, it must be mixed, must be spot on. Then just sit there. It must be spot on. Yeah, it's spot on. Average earnings 2.3, just as forecast. Come on, Twitter, someone post something. Claimant count is negative and unemployment count rate is positive, so it's mixed. That's why you're not seeing any movement. But you weren't going to see much movement anyway unless it was dramatically different, because like we're saying, it's political now. There's about a 10-second delay, I think. Let's check it. 5-second delay on the stream. Yeah, so it's untradeable, the pound news at the moment. Where is our little T-note? Alright, here we go. Might put up the dollar yen. Cheeky little dollar yen. So you could get away with just using these charts right now, these four. If you had to choose four on a desert island, I'd choose these four. You can probably get away with most. You tell me what's happened in these four, I tell you what's happening in those other currencies. Alright guys, let's have a little review here of some of the trade ideas from the trading room. If you are if you're watching this on YouTube, come across to Forex Signals. You will be able to see the video live here. I've just hidden that. And you can ask questions in private. Okay. Albanese. We're going to war, mate. We're going to war. TP, you want to bust 110. Take to profit just above 110. Definitely achievable. And your stop loss 109. Alright. Basically, I've got the exact same trade, but reversed. So, one of us is going to make some monies. You, I mean, my take profit's a little lower than 109, but you know, we're basically on the other side of each other trade. It is a little dangerous though, right? It is a little dangerous to be counter trend trading. I think I might, I don't know, want it to go lower more than it will go lower. But the RSIs are showing some pretty crazy numbers on most time frames. We have a short from red green. I mean, look, if US dollar strength is going to overwhelm the... We had another rumor out this morning, right? Not rumor, actually, straight up news. UK may, you know, a judge came out saying that the Brexit may be delayed 2 years. That spiked up the pound this morning. And since then, you know, you've had that US dollar strength, second leg, it's capping this. But that sort of news is, you know, more important than they've got no plan for Brexit. If it's delayed 2 years, that's bullish for the pound. You know, we'll have obviously volatility in a year and a half from now, but you know, a lot can happen in 2 years. You could have a second referendum, which is something talked about a lot. SARS has bought the Aussie. We just looked at this Aussie, mate. I mean, look, it's at a great little level at the 200-day, but you're pressing fate, keeping on buying this dip. Pressing fate. It's not very clear what's weaker, the Aussie or the Euro today. I wouldn't be trading the crosses. The CAD is obviously the strongest of the commodity pairs because of the oil moves, but it's by no means clear as well. And we got another pound short. So, no, I mean, look, yeah, all those trades are pretty good. But you know, you're basically pushing ideas when there isn't clear ideas. You know, there's no clear trade. It's very hard to trade today. Easily could be on the wrong side of the market, even if you're following the trends. Let's have a look at some of the research though. Let's see what some banks are suggesting in terms of how close we are to a sort of a pullback in that sense. Yuan's actually been weakening pretty sharply, and that's very different to the last taper tantrum that we had. In the last taper tantrum, the yuan was strengthening. So here they're suggesting that the Mexican and the yen are both extremely oversold, given the moves, while the Aussie is the most expensive and the yuan's the most expensive. Jesus. Okay, let's have a little look at that. I mean, this is their own internal modeling, but Deutsche Bank for a long time were the biggest bank in FX, right? They're no small joke in the FX market. I think they're being replaced by Citi. So this is their wheel of the cheapest to most expensive. So in theory, if you're just trading off valuations, then you should be short Aussie yen, which is one of the strongest trending pairs out there. People piled into that in the last 2 weeks. In terms of the dollar, the room to move is still substantial. We could easily see an overshoot on the 10-year yields to say 3% if the bond market collapses. So the bond market's been in a bubble. So you could have that reaction where the market just goes too far the other way. And it's not so much a valuation issue, it's a supply and liquidity issue. There's no tapering anymore. There's no bond buying from the Fed anymore. But you should see the US dollar supported also from intervention from those emerging markets. They have to buy US dollar at some point, okay, after buying their own currencies to support it. This is all very... They basically didn't put their neck out in anything here. So I think it's starting to call this one the Trump tantrum. And you can see when the USA 10 years start to rally, everything gets dragged higher with it. It's just the speed at which the 10 years are moving is creating that change. The only one country being left behind is Japan, and that's because they're targeting the 10-year yield in their monetary policy. So this is like the best thing that could happen for Japan. Trump seems to... what they really wanted was dollar yen higher, and they didn't know how they were going to get it with their monetary policy. Always a very good report, actually. This one here. He does a good job. You can read most... he puts one out every couple of days. Amplify Capital. Now the reason why they're so concerned about the Aussie and the Kiwi is that as a relative high yielder, that relative yield is being cut in half really quickly. So you're seeing pretty broad weakness in the Kiwi too. And you can see that the 2-year yield swap, which is between, difference between the Kiwi interest rates and the US interest rates projected out to 2 years from now, is starting to fall, and it has immediate impact, right? This is actually a very good report if you really want to get hankered down into what's going on in the market. just on the yield change alone, dollar yen could easily be at 115, guys, if it was done slowly. The fact it's done quickly has made it harder for the dollar yen to do the full move, but that's the sort of move that we've got going on with the 10-year at the moment. And still we haven't been cleaned out. We're going to get the updated data for this because this is always a week late. But we're going to see if there's been a big clean out in the positioning here, because it is, the market's been very long the yen for a long time. Alright guys, I think that's enough for today. Hopefully we have a bit more of a clear picture tomorrow. The trades I'm in are the short DAX targeting 10.6, and a more dangerous trade which is short dollar yen up here. So I've been very patient on selling dollar yen, and I think it's I'm just in here for a little bit of a reversal. It's definitely overbought. Not a clean divergence, but enough. Alright, I'll be back tomorrow at 9 GMT, guys. If you have any questions, want me to look at a particular pair, just send me a private message here. I'll endeavour to answer it tomorrow. I'm not doing a stream on Friday. I'm taking Fridays off for the rest of the year, just except for the NFPs. Just getting that work-life balance. But I will see you all tomorrow, and we'll see if the US dollar rallies run out of steam or not.